Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Checking in on the market rundown, congrats to the bulls, all-time highs for the S&P 500. Facebook had an initial bullish reaction to earnings, pretty much a non-event at this point, and we're just waiting for Amazon and Google into tomorrow. So bulls will take a non-event as we closed very strong. So about 2 weeks ago, week and a half ago, I was talking about how I was no longer comfortable being bullish, but I also talked about how that doesn't mean I'm going bearish. So we've kept the daily uptrend at this point. We were on the verge of losing it. We didn't lose it, so I'm not bullish or bearish where we stand right now. And essentially, I'm going to be waiting to see what a reaction to the FOMC looks like and see if that's either going to push us to a last little climax top, or whether that's going a temporary top, or whether that's going to lead straight to weekly consolidation. So again, just being selective. When I'm very confident on very clear setups, I'm aggressive. And when I'm not confident on unclear setups, I'm cautious. And right now, it's an unclear setup. Obviously, the bulls are in control, but I'm talking about initiating new positions. If you're in bullish positions, it's very easy to be walking up stop losses or just protecting that trade. But in terms of initiating new bullish positions, still just not comfortable up at these levels. So for SPY, psychological resistances 302, 303, and anything above 296.70 will be a daily higher low. IWM finally breaking bullish, the weekly time frame setting our higher low. This is a weekly bull flag, and if we get a break of 158.03, it will be confirmed. So after just a long, drawn-out, slow and steady move, explosion today, taking out pretty much 8-9 days of consolidation in one green day, and we'll see if the bulls are able to break 158.03. If not, and if we pull back from that level, we could just have a tightening range between 158.03 and 153.40, our low of consolidation. So bulls want to get that out of the way and clear that resistance level tomorrow to leave no doubt of the continuation move on the weekly chart. QQQ all-time high. Pretty brutal fake out for bears, where we had the bearish dump yesterday in the DOJ reaction and then all buying all day today. Look at the 5-minute time frame to start the morning. It was just a trap for those bears, and it was a relentless bull move all day, giving us a green Marubozu candlestick. So all-time highs, anything above 190.69 is a daily high or low, keeping the bulls in full control. XLF, extremely impressive. New high of 2019. Next resistance we're looking at goes all the way back to 29.07 from September 2018, about 10 months ago. That's the next resistance level, and again, you would not know that the market, we're potentially looking towards a rate cut very shortly, in less than a week, if you were looking at what the financial sector is doing right now. So still very strong in the financial sector as well. XLV, weekly higher low is trying to form, daily chart, bulls buying the dip. Anything under 92.97 is just a lower high, but it's a scenario where we broke support and didn't get a lot of follow through, and it is a potential healthy weekly period of consolidation. XLV and XBI, healthcare and biotech, definitely weaker than tech sector, financial sector, and SPY as a whole. And we also have to be watching for the potential of the debates in a week. Democratic debates having a potential impact, but just a bit of a laggard right now at this point. And we'll see if those bulls can change the daily trend on XLV and XBI. XBI broke support yet again, and yet again the bulls buy the dip to defend $85. Anything under 87.15 is just a lower high, but the bulls breaking this daily lower high pattern, if they're able to pull that off, again, just a weekly higher low, and very similar consolidation to what IWM saw. Here's IWM on the weekly, 3 little bull flag candlesticks, and XBI is doing the same thing. So watching to see if they're going to be a bit of a delayed move, but bottom line is the S&P 500 can look towards some potential help on its new all-time highs from the biotech and healthcare sector trying to play some catch-up. The VIX is dropping down and testing our recent lows, and we hit that low of $12. That would be the lowest price in months. If that breaks, we're looking down at 11. The 1470 rejection was notable, a double top at that level, and anything under 1470 keeps the lower highs intact, and those daily lower highs have been intact ever since the spike from May. Gold trying to set a daily higher low at 1414. Need to see this inside bar break bullish tomorrow to be confident that daily higher low has been established. From there, we would look up at 1453 resistance. So still keeping that daily uptrend. Silver clearly still leading gold, breaking clearly to higher highs, higher low every single day now for 8 days in a row. And the next resistance after 1663, we're going to be looking back at 17 psychological. Not a ton of resistance in this range. And again, looking at the XAG chart, the bulls continue, I should say the silver bulls continue to beat the gold bulls over the last week and a half, almost 2 weeks. Bull miners gave a daily inside bar, as did the bear miners. I'm going to be watching at this point. If we're looking for short-term trades, I'm more comfortable on playing an inside bar breaking bullish on dust than I am on NUGT. Why is that? The reason is we're just so overextended, and just one day of consolidation to form a higher low is not enough to make me confident that things have cooled off and reset enough to be looking for continuation. That's not saying that we can't see an inside bar bull break on NUGT and higher highs. It's just saying if I'm looking to initiate positions, I'm less comfortable doing that at these levels than I would be on playing for an oversold bounce on dust. And that's just my edge as a trader. I love playing oversold bounces, so I would be more comfortable on a break of 842 for dust. And if we look at 842 and 843, it was actually 847. So 842 and 847 are short-term resistances. And again, it's just a tightening range. Wide range yesterday with that 8% spike, higher low and lower high today, and just a tightening range. Oil, bearish reaction to the inventory report, looking down at 54.71. Again, I'm keeping an eye on the daily chart, but I don't care about what the daily chart's doing. I care about what the weekly chart is doing. And as long as we are within this weekly range, I'm not looking for any oil plays. I'm just keeping an eye on things for when this tightening weekly range gets a clear break. Natural gas, dropping to lower lows on the daily. Daily bear flag confirmed. 215.6 is the only support level nearby and close to a bear break. And dropping to weekly lower lows. Keeping an eye on some trend lines here. Potential falling wedge on the weekly time frame. If we were to drop down and break 215.6 and not get much follow through, that would increase the odds to me that this is a falling wedge and that we will see a bull break in August sometime. But again, I'm not making any trades based off of that. Just like I'm not making any trades based off of oil. These are patterns. I'm always changing sectors, always looking, whether it's MJ, crypto, tech sector, ETFs for commodities. I'm waiting for breaks of tightening ranges to give us spikes in volatility and volume. That's when there's opportunity. That's when we go aggressive. And that's why I watch these charts and say, okay, I'm not interested in it, but I'm sticking it on the back burner. I check in on it every day, and I get ready for when the breaks do occur. So I do expect a bull break in natural gas on the weekly time frame sometime in the next few months, and just patiently watching to see what the setup looks like as we make our way towards the fall. So I appreciate you watching Bulls in Full Control. Again, do not fight blue sky bulls. We have to lose the daily uptrend. We have not lost the daily uptrend since the start of June. That's 2 months of a daily uptrend. And again, my rule of thumb is just not looking bearish while we're in a daily uptrend, which is why I've been sitting on my hands a little bit, playing some individual names that have higher volatility, like Netflix after earnings or other names out there, BYND. But other than that, for the market as a whole, patiently waiting for the break in the tightening range. Thanks for tuning in. We'll check in over the weekend, except it's not the weekend. We'll check in tomorrow. Have a good rest of your day. Have had a lot of nature the last few days through the yard. Saw a big old bear. We were out there doing the raised beds over the weekend, and a big black bear walked through the yard, walked along the edge of the yard. He was a couple 100 feet away from us, but fortunately was not interested in us at all and kept on doing his thing. And then last night as I was recording videos, there was a mama raccoon and 3 baby raccoons right up outside this window here doing their thing. And I had a sucker window bird feeder right in front of me here, and finally some birds found it. And it's actually some baby birds. I've been watching a mom feed some babies in a bush right out here. And I assume these are those babies because they fly fairly clumsily, but they're also more trusting. They'll go to this bird feeder where all the other birds don't trust it. So, we'll check back in tomorrow. Do good things, and we'll see you then.